Banking conditions for most Ninth District banks in the second quarter of 2015 were fairly flat relative to last quarter. Hi, I'm Ron Feldman. I'm the Executive Vice President here at the Federal Reserve Bank of Minneapolis, and I oversee our supervision function. And today I'm going to talk briefly about banking conditions in the Ninth Federal Reserve District for banks in the second quarter of 2015. Before we get started, let me just remind you what is the Ninth District. It's the states of Montana, North and South Dakota, Minnesota, the western portion of Wisconsin, and the upper peninsula of Michigan. And I'm going to cover some banking data in this presentation, but we have a lot more on our website, and you can see the link here to get to it. There's really only two things I was going to cover this quarter. For most of the states, what you're going to see is basically flat conditions. That is, relative to last quarter, the conditions this quarter are very similar. And there's a couple of exceptions here or there, but the bottom line is, for most places, it was pretty much more of the same. The one really big exception was Montana. In the state of Montana, we saw really strong improvements for their banks. So what you're looking at in this slide is two graphs. The one on the left is showing you the level associated with the measure we're going to be looking at, which is profitability in this case. And on the right side is the change. So let's start with the change. This is the quarter over quarter for profitability. Two things really stand out. So most of the bars, which are showing change, are pretty small, which means they're close to zero. And that is, for most of the states in the district, the median bank, so that is the bank in the middle, didn't have much different profitability this quarter than they did last quarter. The big exception is the bar in purple, which you can see is Montana. And there you see a very large increase in their profitability. The only comment I'd make about the graph on the left, about the absolute level, is that for many of the states, we're back to where we were before the financial crisis in terms of profitability. Between 1.2 and 1%, that's a typical return on average assets. First, we looked at profitability, which is a good summary measure for how banks are doing. And now we're going to look at loan growth, because that gives you a sense of where banks are going. And again, generally speaking, if you look at the graph on the right, the change in loan growth, this is year over year loan growth, so the second quarter this year relative to second quarter last year, that change quarter to quarter was pretty big for Montana and pretty small for the rest of the district. Looking over at the graph on the left, looking at the absolute levels, you can see that many of the states are above 8%. That's very strong year over year loan growth. And then finally, we're going to look at where problem assets are. So problem assets are securities or loans that aren't paying in time or in full. And again, let's start on the graph on our right. Most of the states are going to be showing bars that are very small, and they're not showing much change. That's, again, the main theme of the presentation today. In contrast, Montana is showing a big decline, and a decline in your problem assets is good. So overall, we see for Montana, they had gains in loan growth and profitability. They had reductions in problem loans, problem assets. That all looks good for them. For most of the states, it's pretty much more of the same from last year. And I'll just conclude by looking at the left side of this same chart. You can see at the absolute level of problem loans, and just to give you a sense, that's a very low level for almost all states, except for the upper peninsula of Michigan, which has historically had higher problem loan levels. So in sum, the second quarter of 2015 was largely not much change from the first quarter, except for Montana, which has some good times happening in the second quarter. Thank you very much.